Welcome to my channel, your ultimate destination for mastering finance and business management. Whether you're looking to grow your wealth, build your business, or sharpen your skills, we've got you covered with practical tips, expert insights, and actionable strategies. Let's embark on the journey to success together. Are you tired of working hard and still struggling to save? Imagine making your money work for you even while you sleep. In today's video, we're uncovering one of the easiest ways to generate passive income in 2025, high-interest savings accounts. Whether you're completely new to passive income or just looking for a simple strategy to grow your earnings, this video is for you. Let's get started. What is passive income? Passive income is money you earn with minimal ongoing effort. It's a game changer for building wealth over time. Popular methods include investing in stocks, real estate, or starting a side hustle. But not all passive income streams are complex or risky. High-interest savings accounts are one of the safest and easiest ways to start earning passively. They don't require a lot of money to get started, and they guarantee returns on your deposits. High-interest savings accounts. Why high-interest savings accounts? High-interest savings accounts offer a significantly better return compared to traditional accounts. For example, while standard accounts might offer 0.01% annual interest, a high-interest account can pay anywhere between 3% to 5% annually. Here's how it works. You deposit your money, the bank uses it for lending, and they share a part of their profits with you as interest. Unlike stocks or cryptocurrencies, your principal amount is secure. It's perfect for beginners who want steady growth without any risk of losing money. Remember, always check for FDIC insurance, which guarantees your deposits up to $250,000. How to choose the best account? Not all high-interest savings accounts are created equal. Here's what you need to look for. Interest rates, aim for 3% or higher. Fees, watch out for monthly maintenance fees, which can eat into your profits. Deposit requirements, some accounts require a minimum balance to qualify for higher rates. Accessibility, does the bank offer a user-friendly mobile app or easy online transfers? Promotions, many banks offer welcome bonuses for new customers. Real-life example. Let's say you deposit $10,000 into a high-interest savings account offering a 4% annual interest rate. After 1 year, you'd earn $400 in interest without lifting a finger. Compare that to a traditional savings account earning 0.01%. You'd make just $1. This is the power of compounding and choosing the right financial tools. So, there you have it, a simple and safe way to start earning passive income. High-interest savings accounts are ideal for beginners because they're low risk, reliable, and easy to set up. What's stopping you from taking advantage of this opportunity? Additional benefits of high-interest savings accounts. Aside from the obvious benefit of earning more money, high-interest savings accounts can help you reach your financial goals faster. They're perfect for building an emergency fund, saving for a big purchase, or even for long-term financial goals like retirement. Tip: consider setting up an automatic transfer to your high-interest savings account. This ensures you save consistently without thinking about it. Limitations to consider. While high-interest savings accounts are a great option, they do have some limitations. They won't make you rich quickly, but they offer a stable income. If inflation rises faster than your interest rate, the purchasing power of your savings could decrease. Understanding interest rate fluctuations. Interest rates can change, and it's important to stay aware of this when you're using a high-interest savings account. While rates can go up, they can also go down. Most banks adjust their rates based on the Federal Reserve's decisions or economic factors like inflation. In recent years, interest rates have been rising, making high-interest savings accounts even more appealing. But keep in mind that these rates may not stay fixed forever. Make sure to regularly check if your bank is still offering competitive rates. How to maximize your earnings. To get the most out of your high-interest savings account, consider these strategies. 1. Start with larger initial deposit. The more you deposit, the more interest you'll earn. 2. Add deposit regularly. Make small, regular contributions to your savings. This helps grow your balance over time and earns more interest. Take advantage of bonuses. Many banks offer sign-up bonuses or referral bonuses. Look for accounts with promotions that align with your financial goals. Avoid withdrawals. Withdrawals can reduce the compound interest you're earning. Try to treat your savings as untouchable for a set period. Online versus traditional banks. When choosing a high-interest savings account, you may wonder whether to go with an online bank or a traditional brick-and-mortar bank. Online banks typically offer high interest rates due to their lower overhead costs. For example, some online-only banks can offer rates up to 5% or more, while traditional banks usually offer lower rates around 1% to 2%. However, online banks may not have physical branches, so if you prefer in-person banking, a traditional bank may be more convenient. But for earning the highest interest, online banks are often the better option. What to watch out? Before opening a high-interest savings account, there are a few things to be cautious about. Some banks offer high interest rates as a promotional offer for the first few months. After the introductory period, the rate may drop significantly. Some accounts may require you to maintain a high minimum balance to earn the highest interest rate. If you fall below that balance, you could lose out on earnings. Many high-interest accounts have limits on the number of withdrawals you can make in a month. Exceeding these limits could result in fees or a lower interest rate. Always read the fine print to ensure there are no hidden fees that could eat into your earnings. Comparing other passive income streams. While high-interest savings accounts are a great way to start, they're not the only passive income stream out there. Let's take a quick look at how they compare to other options. Stocks offer the potential for higher returns, but they come with higher risk. Unlike savings accounts, there's no guaranteed return. Investing in property can be profitable, but it requires a larger initial investment and involves more work, like property management. This method allows you to lend money to individuals or small businesses, with the potential for high returns, but also high risk. So, high-interest savings accounts are the safest, easiest, and most hands-off way to earn passive income, especially for beginners. Setting up your account. Setting up a high-interest savings account is a simple process, but here's how to ensure you're doing it right. Start by comparing interest rates and features at different banks. Some accounts are better for long-term savings, while others are designed for frequent deposits or emergency funds. You'll need personal information such as your ID, social security number, and proof of address to open the account. Real-time case study. Let's look at a real-life example of someone using a high-interest savings account to grow their wealth. Meet Jane. Jane started with a $5,000 deposit into a high-interest savings account, offering 4% annual interest. How taxes affect your savings? While high-interest savings accounts are a great way to earn passive income, it's important to consider the tax implications. Interest earned on savings is generally considered taxable income. The good news is that in most countries, savings account interest is taxed at a lower rate than other income types, but it still counts toward your overall taxable income. For example, in the US, savings account interest is taxed at your regular income tax rate. However, if your savings account earns more than $10 in interest per year, your bank will send you a 1099 form. It's always a good idea to track how much interest you're earning so you can prepare for tax season. Depending on your tax bracket, your savings might not be growing as much as you think due to taxes. Thank you for watching Sapric Your Finance. If you found this video helpful, don't forget to like, share, and subscribe. Hit the bell icon so you never miss our latest insights on finance and business management.